All right, let's just get right into it. If you've looked at the crypto market today, you know it is a sea of red. So in the next few minutes, we are going to cut through all that noise and break down exactly what happened, why it happened, and what you need to be watching for next. So the headline number for today is just staggering. We're talking nearly $2 billion, completely wiped out from leverage positions in just 24 hours. And this wasn't some slow drip, This was a fast, brutal cascade that caught a ton of traders totally off guard. This number really sets the stage for everything else we're about to cover. And, when that much money just vanishes, the emotional whiplash is immediate. The crypto fear and greed index, it has absolutely plummeted down to 11. That is deep in extreme fear territory. This isn't just a number on a chart. This is the market literally screaming that panic is in the air. Okay, so we've got a massive liquidation event on one hand and extreme fear on the other. But what's the connection? What was the first domino to fall? That's exactly what we are going to unpack right now. Here's how we're going to make sense of all this chaos. First, we'll get a snapshot of the whole market. Then we'll dig into Bitcoin's huge role in this mess, see how altcoins got caught in the crossfire, search for any, and I mean any, glimmers of hope, and then we'll wrap up with what your next move should be. So first up, let's take a look at the market snapshot. To really get the full impact, we've got to zoom out and see just how bad the damage was across the board. The entire crypto space, the whole thing, shed over $120 billion in value. And this wasn't just a crypto thing either. We were seeing a broader risk-off mood across global markets. What that means is investors were basically running from anything they see as risky, like crypto or tech stocks, and moving their money into things they think are safer. Okay, now for the big question. What actually started all this? Well, to find the answer, you gotta look at the king, right? You gotta look at Bitcoin. Its sudden nosedive was the very first domino to get pushed over. And this chart right here just perfectly shows that trigger point. Bitcoin took a sharp dive from around $92,000 all the way down to $82,000. And on some exchanges, there was a flash crash that even saw it tap $80,000 for a second. This huge drop is what kicked off the whole liquidation cascade. But what does that term even mean? So for anybody who's not super familiar with this, leveraged liquidation is the key. Think of it like this. Traders borrow money to make a much bigger bet that a coin's price will go up. But if the price drops to a certain point, the exchange just automatically sells their stuff to pay back the loan. And that forced selling, it just shoves the price down even more. And that is the domino effect. The first price drop triggered a few liquidations. That selling pushed the price lower, which then triggered even more liquidations. It just becomes this vicious cycle. And at its worst point, nearly $1 billion was liquidated in a single hour. Just 60 minutes. Unbelievable. Man, it is such a painful thing for any trader to go through. I'm actually really curious to hear from you guys. Have you ever been on the wrong side of one of these events? Drop your story down in the comments. Let's talk about it. You know the old saying, right? When Bitcoin sneezes, the rest of the market catches a nasty cold. So let's take a look at how this Bitcoin-led crash just sent shockwaves rippling through the entire altcoin space. Now, what's really fascinating about this chart is just how uniform the pain is. I mean, look at this. We're seeing huge projects like Ethereum, Solana, XRP, BNB. All of them are down between 8 and 11%. Even Dogecoin took a major hit. It's just such a clear picture of how, in a panic, everything gets dragged down together. And Ethereum, well, it had its own problems on top of everything else. It was kind of a double whammy. Not only was it getting dragged down by Bitcoin, but it also saw over $400 million in its own liquidations. Plus, the recent money flowing out of Ethereum ETFs was already putting a damper on things, just adding more fuel to the fire. Okay, so everything is down, sentiment is in the toilet. It is really easy to feel pessimistic right now. But even in a market this chaotic, there are always some interesting countermoves happening if you just know where to look. And this is where the story gets really, really interesting. So on one side, you have the regular market in a full-blown panic. But on the other side, you've got huge players like Cathie Wood's Ark Invest doing the complete opposite. They're actually buying the dip, snapping up another $40 million worth of crypto-related stocks. I mean, this is a classic be greedy when others are fearful moment. So here's the billion-dollar question, right? Is Ark making a brilliant long-term play here, or are they just trying to catch a falling knife that's going to cut them? What do you think about this move? Let me know. And if you want a perfect example of how weird and unpredictable crypto can be, look at this. In this absolute bloodbath of red, one meme coin, Cheems, actually went against the grain and pumped over 13%. It's just a little reminder that this market never ever moves completely in sync.
All right, so we've seen the crash, we understand why it happened. Now let's wrap this all up with the most important part, what you should actually be looking for over the next few days.
Okay, so moving forward, here are the three things you need to keep your eyes glued to. First, that $80,000 support level for Bitcoin, can it hold? Second, what are the big institutions doing? Are they buying more, or are they starting to sell? And third, watch that fear and greed index. Any shift away from extreme fear is going to be the first real sign that maybe, just maybe, some confidence is returning. Look, at the end of the day, moments like this are a stress test for every single investor. The key is not to react with emotion. This is the time to just take a breath, look at your own strategy, and maybe reevaluate how much risk you're really comfortable with. Panic selling is almost never the answer, but ignoring a major market shift isn't the answer either. And that really brings us to our final question for you. It doesn't matter if you've been in crypto for years or if you're brand new. Every crash teaches us something. So what's the one big lesson you were taking away from this recent one? Share your thoughts down in the comments. Thanks so much for watching.